Thank you. Thank you very much, Georgia, and special thanks to Maktar and Her Majesty Queen Massima for setting the stage for this week's meeting and challenging us to advance the sustainable finance agenda in emerging markets, bringing the combination of the 3 points that Queen Massima mentioned in her opening remarks, sustainability, stability, and inclusion. A combination of 3 factors that are at the core of any financial sector development, and I think that the interaction between these 3 points are probably more relevant than ever. As chair of SBFN, it gives me a great pleasure to join them in actually acknowledging SBFN 10th anniversary. This is a momentous milestone. I want to congratulate, first of all, the 10 founding members and the 61 additional institutions that joined us in the last 10 years to representing now 47 countries around the world, which is quite impressive. 47 countries, all of them emerging or developing countries. As you know, SBFN is focused on emerging markets, and also countries in which we don't only represent regulators or supervisors, but in the SBFN is also represented the private sector, which is the second critical, I would say, characteristic of SBFN versus any other initiative that we see worldwide. No? And probably the third characteristic as well, which is quite important, is that a few years ago, we opened the SBFN beyond the banking sector. So we also opened the SBFN to Securities Exchange Commission, to institutional investors, insurance, pensions. So really thinking that the SBFN or the sustainable finance needed to actually bring as well other players, other institutions, and not just the banking sector. No? Especially thinking on how we can mobilize the capital and mobilize the financing that is needed to achieve the goals that we have in mind. So with this, SBFN Global Meeting has traditionally been actually a critical gathering of members that we are collectively, and we collectively identify the priorities, no? Which is another interesting characteristic of SBFN. SBFN is the consequence of all the members of the network. So we all together have been defining the agenda. We all together have been working on how we and helping each other on moving our agenda forward. And this is precisely what we want to discuss during this conference, during these 3 days. No? How we have done in the last 10 years, but even more important, what are the priorities for the next 5 years or 10 years? Where should we focus? Where should SBFN focus to continue having the impact that it has had in the last years? I think that the SBFN 2021 Global Progress Report that we launched last October was actually quite a good exercise of taking stock of where we are, taking stock of where countries are in terms of advancing the sustainable finance agenda. And actually it captured many inspiring, I would say, trends and milestones. Maktar mentioned some of them, for instance, that countries have launched over 200 policies, regulations, or voluntary principles and other frameworks to support sustainable finance. No? So 200 is not a minor number indeed. But there are also 3 additional findings that I wanted to share with all of you before starting the panel. The first one is that today we can think, or we can say, that most of the countries, members of the SBFN, have already launched ESG risk frameworks in line with international good practices. Remember that when SBFN was created, it was mostly focused on ESG risk. So it was not that much focus on climate, but was really broader, was ESG. And the idea was that we need to prepare developing countries to attract millions or trillions or whatever flows of international capital, to mobilize capital. And for that, we need to make sure that we have the ESG frameworks in place according to international standards. That was the role that SBFN tried to play at the beginning. This, after achieving, or most countries have already achieved that, and it has moved the agenda towards climate risk. So really thinking on how we can help or how countries can advance as well on formulating approaches to manage climate risk. No? And we know that globally we are far from where we would like to be, and therefore there is a clear potential line of work that we collectively and together with other institutions definitely will have to do. No? And the third piece that I believe is also quite critical is thinking on what are the instruments that we need in order to achieve these goals. No? Financial instruments, how we can continue helping launching, issuing, discussing guidelines for green, social, or sustainable focused financial instruments, no? Either loans, bonds, or any. We will talk a lot about this during the conference, because I think that this is one of the critical things that we are discussing also globally, how we can really come together with either taxonomy, standards, guidelines, however you want to call it, in which we speak the same language, and actually countries or investors can find the same type of instrument, the same type of asset class, no matter in what country they invest. So with all this, I think that there are three challenges in front of us, but we ahead of us, at least, that I would like to discuss during this conference, and we will see where does it take us. No? One is that there is one critical thing for SBFN and for IFC and myself particularly, which is how do we move from definition to adoption or implementation? And this is going to be a key thing. So once national frameworks, either for climate ESG or climate finance or taxonomies are in place, how do we ensure the adoption of this framework? How can we ensure that the financial sector and the rest of the private sector really embrace it and start implementing in their own constituencies? So this is going to be key because we need to find out what is the role of the supervisor, what is the role of the policymaker, what are the incentives that are needed, do we need a mandatory or voluntary market practices? So how can we accelerate the agenda? No? And I think that this is a question that is on top of all of us minds. No? The second is how to measure. Measurement is going to be key. And we know that measurement is not easy because for that, first of all, we need to think or we need to agree on what to measure. But second, once we agree on what we have to measure or what we want to measure is how to measure it, no? Especially by the financial sector. No? So how can we make sure that we have the right and a collective, I would say, understanding of how to measure, because this is what will give us the information to move forward and to take decisions as we move in the right direction. No? So with this, I think that the answer of these questions will be part of the discussion during this conference, and I'm sure that it will help us to shape the role and priorities of SBFN going forward. Actually, each of the panels that we will have along these 3 days will be precisely focused on part of these questions. No? Measurement, what is the impact in either countries, and inclusion, as Queen Massima mentioned, partnerships, how do we engage with others, what is the role that SBFN has to play. I have discussed, for instance, with NGFS in many occasions. We have today Tobias Adrian from the IMF here in the panel with us. So how can we collectively really end up with a positive coordination game and we don't really lose efforts or we don't create inefficiencies tackling the problem from many different angles or from many different places. No? So in a way, how to shape the frontier of sustainable finance in emerging markets is the goal that we would like to discuss. And given that we have close to 1,000 people connecting to this conference, I believe that this is a good stage to discuss these issues and to agree on a good path going forward. So let me turn now to our panelists today. So we have a hybrid session. Here with me in Washington, I have Dr. Wimbo Santoso, chairman of OJK Indonesia. Thank you, Dr. Santoso. Great to have you here in Washington.
Thank you.
We have Tobias Adrian, final counselor and director of MCM, Monetary and Capital Markets Department in the IMF. Thank you, Tobias, for coming. And then connected by virtually, we have Dr. Ma Jun, who is the co-chair of the G20 Sustainable Finance Working Group and co-chair of the European Union IPSF Taxonomy Working Group, and also the chairman of Green Finance Committee of China Society for Finance and Banking. So G20, European Union, China. A good combination to actually talk about the things that I would like to discuss today. Thank you, Dr. Ma, for joining us, and great to see you again. And last but not least, we have Ms. Jolie Mokorosi, who will bring the perspective of the private sector and actually from the institutional investor side, which is, as I mentioned before, a critical development if we really want to move the agenda forward, how we can bring the institutional investors into this discussion. No? Ms. Jolie Mokorosi is the director of Batseta Council for Retirement Funds for South Africa and the inaugural deputy chair of the Batseta Asset Owners Forum. She's a professional executive, principal officer, and independent trustee in various funds in South Africa. So a perfect person to bring us the perspective of institutional investors in a country like South Africa. So let me start with a question. Of course, as moderator, I will try to And I will ask you to please don't take more than 4 or 5 minutes per question. I would like to have 2 rounds of questions and then probably one final and concluding quick question for each of you. But let me start with Dr. Santoso.
Okay.
So Indonesia, Dr. Santoso, OJK was a founding member of SBFN in 2012. And your institution has played a leading role in advancing sustainable finance in Indonesia, but also in the region. Actually, as Vice President for Asia, I can testify that that's the case, and I think I really would like to congratulate you and OJK for the achievements and the work done. No? But looking back at this journey and what has happened in the last 10 years, what do you think are the key achievements that you would like to highlight as being essential to Indonesia's success? So if you have to advise another country, any of the 50 countries that are connected today, what was successful? What was the key thing that OJK did in order to make it a successful path?
Okay. Thank you, Mr. Alfonso, for nice introduction, and also thanks, Queen Maxima, Majesty Queen Maxima, for a really very clear message of how that we have to have some collaboration going forward to achieve the main objective of the ESG, and also the zero emission, and also the reduce the poverty and so on. First, I would like to say that Indonesia is a huge country. We have 274 million people. Then we have 17,000 islands. As you can imagine how difficult actually to run this kind of the geographical phenomena, and also the a lot of people living in the rural area. Then we are rainforest country, so the climate is really important for us. Reducing the poverty is our main objective. Creating job is also the main objective of Indonesia. Then the sustainable finance is very important agenda in Indonesia, as we believe that the government itself is not enough really resources to deal with the kind of the issue in Indonesia. Then of course the collaboration, government, private sectors, and also philanthropy, and also the community is very important in Indonesia. So that why we have to set as like a roadmap is very important for us to understand what it is. So everybody should revert to this kind of the roadmap. So sustainable banking and finance network. Indonesia is classified as the country who in the front line, to make sure that all of the government agency, private sector, banking, and also non-banking, and also community understand about why we need this. Then actually we have to really to make sure that awareness is the most very important to understand this. Then so that why in 2015 we issued, we call it the roadmap on the sustainable finance in Indonesia, covering 5 years term, 2015 to 2020. Then even now we start in the second phase, the 2020 to 2025, 2024. I think the lesson learned from the first roadmap was really public awareness was very low, very difficult to convince the people. And then how that even we start with issuing some of the instrument, green instrument, we call it the green bond. Even though we believe, we have some challenges of the kind of the introducing this instrument, but the result is really not bad. We actually we've been issued sovereign green sustainable bond amounted 10.5 billion US dollar globally, and 847.15 million will private green sustainable bond worth around 3.075 billion US dollar globally, and also 382.14 million domestically. So actually we start, even though that we believe actually we still have some more opportunity to get higher than that number. Then also in the banking sector, total sustainable related loan is reached 55.9 billion US dollar. Most of the Indonesian banks are showing increasing commitment in implementing sustainable finance as measured from the improvement in the quality of sustainable report. So actually in the first roadmap, we also require the financial institution in Indonesia to set the report, we call it the sustainability report, to make sure they have a commitment on this. Then also to raise awareness, we have a collaboration with academics. We provide a learning center for the professional, policymakers, and also general public. We call it the Bali Center Sustainable Finance in 2017. Basically, this as a bridge from academic world to industry practitioners and also policymakers. Now, OJK also strengthened the cooperation with international stakeholders in the area of blended finance, the Truth Trihitakarana Forum, and notably international platform that enables smooth operation of funds such as SDG Indonesia 1. The SDG Indonesia was launched in Bali in 2018 during the IMF annual meeting that's covering 31 projects in Indonesia. Then worth around 3 billion US dollar more. Then also OJK issue complementing policy to support sectoral initiatives such as incentive for green bond and also electric vehicle and also establishment of carbon exchange lane this year and the second roadmap. Then and then actually we our spirit is basically we can provide stake and carrots. I think, and also we call it the green taxonomy in our second roadmap. It is actually as a basis, for everybody. That is actually been, developed collaboratively with several ministerial. So to make sure that we have a basis, the same understanding, what kind of the sector that we consider as green or less green. Then, of course, we can provide some incentive for the one that we consider as a green. Then, of course, we try to enlarge the incentive, not only giving lower risk-weighted asset for the lending to the electric vehicle, but also we can broaden the coverage to the upstream and downstream of the sector. Then hopefully it is not easy. I believe we need some of the collaboration again, not domestically, but also internationally, how to make sure that the financing gap can be closed by not only government and also the private sector, philanthropy. Since we have a basis on the green taxonomy, but the issue is how to make sure that in the field they are moving towards that we really to achieve the main objective of the is not easy. So again, also in the financial sector, we try to come up with some of the risk management guidance on the climate, to make sure that people can understand what is the risk and then what's the incentive, and also of course we will try to disincentive as well. On top of this, we try to also to develop our carbon exchange market, because actually the government can give the carbon credit upon the sector that comply with these kind of the guideline. And then also how to make sure that some sector that they are less complaint, they can buy a carbon credit from others. Then so the carbon exchange traded is very important in Indonesia. Okay, I'll stop here.
Full agenda.
Thank you very much.
Dr. Santiso, thank you very much for your insights. Let me go virtual now to Dr. Majun. Dr. Ma, I think that, I mean, you have, as I mentioned when I introduced you, your multiple leadership roles to advance the sustainable finance agenda in China, European Union, G20. I would like to or I'm sure that all the people connected will be eager to actually know from you what are the areas where you think that we have really done enough progress, and where you think we are already there, and we collectively have probably achieved the objectives that we had, 2 areas, let's say, and what are the 2 critical challenges that remains? No? If I mean, from your perspective, you are probably the one that has the biggest picture of how this agenda is moving globally. No? What have we achieved? What are the main challenges?
Thank you very much, Alfonso. Can you hear me?
Yes, very well.
Great. Now, maybe I'll just briefly say a few words on what China has been doing and what this IPSF working group, which I co-chair with the European Union colleagues, is doing, and also a little bit on the G20 level. And then I come back to your question on what can be done further. Within China, we started building a green financial system in 2014. At that time, we had a framework, which was a proposal for the central government. It was approved, and then it became a mandate for the central bank to develop the guidelines for green finance. And under the guidelines in the past 6-7 years, we now have what I call 5 pillars for the green financial system. Pillar number 1, taxonomy. We now have 3 sets of taxonomy for green finance. One is for green lending, one for green bonds, one for green projects. And the central bank in China is now working on transition taxonomy, which is a separate subject, a very, very important one. I can come back later. And second pillar is disclosure. We started off with the disclosure of green loans and green bonds. These are required on a mandatory basis. And then moving towards some framework level disclosure requirement for listed companies on ESG. And I think in the future, we'll be introducing more mandatory requirements for carbon-related information disclosure. Pillar 3 is risk analysis. Recently, for example, the central bank in China required 24 banks to conduct a climate risk analysis by asking them to stress testing on shocks such as carbon price increase, and see how it's going to affect the NPL ratio in carbon-intensive sectors such as steel, cement, and coal-fired power generation. So they are aware that these sectors are posing risk financially to the banks. And the 4th pillar is products. In the past 6-7 years, we have built the largest green lending market, which now amounts to 16 trillion RMB in terms of outstanding amount. That's the largest number in the world. And we have built the 2nd largest green bond market. In addition, there are lots of more innovative products, such as green ETF, green ABS, green carbon products, and many others. And the final pillar is what I call incentives. Just to give you one example of what Chinese central bank was doing last year, it introduced a decarbonization facility through which low-cost funding is provided to low-carbon projects through the commercial banks. The funding cost is only 1.75% from the central bank, which is roughly 2 percentage points below the market. That's equivalent to an interest subsidy of 2 percentage points. That's sort of a nutshell on the China side. In terms of IPSF, which is a platform initially set up by EU and joined later by China and many other countries, a working group was launched about 2 years ago under the IPSF to work on a common ground taxonomy. And this work, which is co-chaired by myself and Marcel Hug from EU, has resulted in common ground taxonomy version 1 in November last year. This taxonomy includes the climate mitigation activities that's recognized both by the EU taxonomy and by the Chinese taxonomy. which will enable, for example, the Chinese issuers to issue green bonds in international markets, especially to European. And of course, I think this common ground taxonomy can provide a basis for many other countries if they want to develop their own taxonomy. So common ground taxonomy could use as a reference or a starting point. And finally, on the G20 level, I've been co-chairing initially what's called the G20 Green Finance Study Group, starting from 2016. And now this group has been upgraded to a working group on sustainable finance. And the current major work of the G20 Sustainable Finance Working Group this year is to develop a transition finance framework to address the problem of not enough financing for transition activities, namely those activities which are currently carbon intensive, but they have a plan and pathway towards the low carbon and net zero. And within this framework, we're expecting 5 elements, including how to identify transition activity, how to disclose transition activity, related information, how to design the financial instruments that are suitable for transition finance, and how to put in place incentives, and finally, how to make sure that transition is just, making sure that the social implications are being addressed, for example, unemployment, which is often associated with a transition. So these are sort of high-level remarks out of the 3 hats that I'm wearing on green sustainable finance. But just quickly on your question of what can be done further, I think for developing country, emerging markets, the starting point should be a taxonomy, because you need to know what is green, what is not green. This is done probably in 20 countries already, but I think many other countries need to catch up with a clear definition and credible definition of taxonomy. And with that, you have a measurement, which is the question, Alfonso, you asked. You can measure how much green activities, green finance activities are being done. And also partially based on taxonomy, you have the proper disclosure of green versus non-green activities. Of course, there are many, many other things to do. I think largely involve the 5 pillars, which I have spoken about. I'll be happy to come back for discussion later on.
Okay. That's great. Thank you, Dr. Mayun. It's great to see and to have a very good summary of what these 3 initiatives are doing. And actually, one of the things that I mentioned before, and I believe is critical, one of the key things or key, I would say, success stories of the SBFN has been precisely the peer learning, right? How through the network, some countries have approached others that have, for instance, developed a taxonomy to learn how to do it, and some what we call South-South exchange of knowledge and learning processes. No? So great to hear from you the need to actually use that as well to move on the taxonomy forward and to incentivize other countries to go in the same direction. So now let me continue virtually before I come back to Tobias here in HQ. A question to Ms. Mokorosi. Ms. Mokorosi, as I mentioned in your introduction, you are a key part of the representing the institutional investors, especially pension funds in South Africa, with all the initiatives that have been launched recently. The question to you, I really believe, or we really believe, that pension funds are critical, a critical player to scale sustainable finance and to really make it really something embraced by the whole financial sector and not just something related to banks. No? So my question to you, a little bit naive, or I would say very basic, would be what are the main challenges and opportunities that you see for the pension funds to come into sustainable finance? I mean, are the challenges that we face from the institutional investor side the same ones that we are discussing when we approach it from the banking industry, or are these different? What are the main challenges that you see from an emerging market and pension funds?
Thank you very much. And I'm going to borrow from some of the comments made by the previous panelists and even from the Queen herself, Her Majesty. There's a number of developments that have taken place, particularly in South Africa, that I think touch on what the rest of the African continent might be experiencing. I want to point out that the South African retirement fund industry is the largest one on the continent. It's in multiples of other countries, let alone the continent as a whole. However, there are some significant developments that still need to take place, even though we've made some significant strides towards becoming not just an inclusive financial services industry, but one that is able to use its institutional investments in the ways that we want to see national development happen, whether it's nationally, we want to look at more infrastructure or greener type investments, or addressing or using our funding to address issues of climate change, which are not as far from most people as we would like to believe. Now, to illustrate my points around opportunities and challenges that we are faced with, I want to take you back to a fireside conversation that I had, or that we had as an industry with MEDA, which is a division of USAID. And when they facilitated that conversation, it was between ourselves and retirement funds on the American continent, predominantly in the US. And some of them might have had a reach a little bit beyond the US, but some of their larger pension funds. And we discussed the issue of their investment on the African continent. What was their hurdle, or one of their biggest hurdles to investing on the African continent, particularly on the private equity side and in infrastructure, which allowed us to meet some of our sustainable targets. And their feedback to us was actually that from the African continent. And that lack of information then creates uncertainty, and that uncertainty creates barriers to entry for them, or limits their ability to rapidly or willingly invest in our countries. And certainly one thing they said that would help them is if they had more publicly available information, not just about the specific investments, but about our economies at large and the operating environment in which our economies actually, in which our economies operate. So having said this then took us a little bit back as the retirement fund industry in South Africa, because something that is critical to us in meeting the sustainable target or increasing our investments in this space or backing this is actually other funds getting involved. The more other funds are involved, the more we can de-risk the space. And that permits us to then invest in with a little bit more comfort, knowing that our members cannot accept a high level of risk, like say more disposable investments or disposable income that a member would normally have. So this has brought me to the conclusion that a lack of information, or where at least the sustainable banking network or the IFC or other such institutions, or just banks at large can get involved, is actually making publicly available information more easily accessible, or the type of information that they can share that allows other financial institutions outside of our countries to make the necessary financial decisions to invest in our countries. I believe that the level of inefficiency that we have in Africa also presents an opportunity. In as much as it presents a challenge to us, it does present an investment opportunity. Arbitrage opportunities are fewer in the West because there's so much more efficiency. Having said that, I want to go back to an African proverb. You know, we got an African proverb that says, if you want to go fast, go alone. And if you want to go far, go with others. So another thing that has been incredible for us, even in South Africa, having been involved in structuring this green finance taxonomy, is just the availability of information from other countries and the level of assistance, including from Dr. Ma's country, from China. We did borrow a little bit, read your taxonomy, including Kenya and other European countries. So the more information that is publicly available, the more efficiently we can do some of these things. So we found ourselves not needing to start from scratch in some of these initiatives, keeping in mind that retirement funds have a limited governance budget. So we are heavily dependent on information from external parties, especially trusted parties like DFIs, to provide us with the kind of information that allows us to make those critical financial decisions that not only benefit our members, but also allow us to do some nation building in the process of how we vote with our rands, dollars, shillings, maluti, whatever currency that we are using in whichever country. It does permit us to vote with our money with greater confidence if we do have that oversight from those entities. And I think I'll stop there for now. But I could go on and on about sustainability, but thank you so much.
Thank you. No, thank you very much. And I think that it was very, very good and very specific suggestions, very concrete. So great. Thank you very much, Ms. Mokorosi. And I know that asking each of you with all your knowledge to speak only 4 minutes about a topic that you could be speaking for days, I know it is challenging, but and I appreciate a lot the effort. I like it very much. If you want to go fast, go alone. And if you want to go far, go with others. You know, in Africa, they always have a proverb for many situations. And this one is really great and perfectly fits perfectly with the conference. No? Mr. Adrian Tobias, the IMF, what is, so actually I remember in one recent GFSR, you published some statistics on ESG linked debt issuance and how the market was booming, no, on ESG, especially emerging markets, and the flows that we were receiving in emerging markets related to ESG. No? But there were also, I think in a blog, probably you or Fabio, I don't remember that published, there were some questions on how to make sure that we create an asset class, no? How to make sure that we create that the valuation is, I mean, that the assets in which we are investing are similar so that valuations can be done accordingly, etc. No? So here, what I would like to get from, I mean, to ask you, Tobias, in addition to whatever you would like to respond or to frame the question, what do we need to do in order to, because we have been talking about this creation of an asset class forever, no? What is needed in order to make sure that we talk about the same thing? No? How can we, Dr. Ma was talking about the taxonomy, that only 20 countries have a taxonomy. No? How can we ensure that the taxonomies that we create also can be implemented in countries that probably do not have the same structure, I would say, or the same means that those more advanced economies or countries that are defining taxonomies that might be not easy to apply to other countries. No? So how can we make sure that we create, I mean, if it is the way to go in order to create an asset class, what else is needed? And second, how can we make sure that we have a good balance between a tight standard or taxonomy and the flexibility that is needed for implementation?
Thanks so much, Alfonso. It's my pleasure to be here. Let me start with the positive news, and that is that sustainable debt issuance for emerging markets has increased to 190 billion in 2021. And so the share of emerging markets in global bond issuance has risen. So this is the first time that emerging markets have gained market share from advanced economies. So that's the good news. There is certainly sufficient global capital to close investment gaps. In fact, when we looked at the latest IPCC report, that's the Intergovernmental Panel on Climate Change, they estimate that financial flows are something like 3 to 6 times below what they should be. So we really have to scale up in order to limit global warming to 2% by 2030. Emerging markets have to be at the center of global sustainable financial markets. So what are the policy steps? And that goes to Alfonso's question. What are the policy steps that need to be taken? And, in my view, developing this market to really scale it up, make it bigger, make it in the trillions, not in the hundreds of billions, but in the trillions, which is what is needed to transition globally. We do need very clear signals and initiatives from governments and IFIs like the IFC in order to scale up. Looking at what needs to be done, I think what is needed is mainstreaming sustainable finance strategies. So that includes regulators, stock exchanges, as well as the broader policy community. Some emerging markets have been active in implementing climate-related disclosure requirements and taxonomies. And so we have seen very significant advancements on both areas. We already heard about the taxonomies, but I think what is even more foundational are the disclosure regimes. And I think this is where there has been some, very significant progress under the auspices of the IFRS Foundation that has started to really work on climate data. And of course, the global regulatory bodies are working on disclosure regimes. But having said that, financing remains in emerging markets remains insufficient and needs to be scaled up. And barriers besides the taxonomies and the data, etc., are also the high upfront capital and transaction costs. So you're looking at projects with immense investments upfront and very long time horizons. And of course, there's significant project and country risk. So this is exactly the bread and butter that IFIs like the IFC is working in. And so this is really where the public sector can play an important role in providing public investment and infrastructure, improving data and disclosures, incentivizing R&D, and importantly, working with the private sector. So public-private partnerships, I think, are extremely, extremely important. Of course, carbon pricing would be wonderful to have, but it's unlikely that we're going to move all the way to the levels of carbon pricing that we need. And so this is where I think that climate finance is extremely first order as a complement to carbon pricing. So innovative financing approaches include, for example, providing equity and first loss guarantees by the public sector, mezzanine financing structures. And again, the IFC is really path breaking here. Some of the deals that has come out, I think, can be scaled up and applied across countries. So I already talked about the information architecture, data disclosures and classifications are extremely important. I just want to flag that we at the IMF are working with the World Bank and the OECD, as well as the BIS, to sort of like issue some high-level principles on climate classifications. So it's much less ambitious than what we heard about the taxonomies, right? Taxonomies are very detailed, but many countries won't be able to do that. And so more high-level principle-based classifications are sort of like a complement to that. So let me finish by saying that capacity building is also extremely important. And both the World Bank and the IMF, of course, are scaling up tremendously in this area. Let me pass back to Alfonso.
Thank you, Tobias. Thank you very much. I think very insightful as well reflections and very clear challenges that we are facing and how to that will help us to really set up the agenda for the next years, not only for SBFN but actually for each of the countries that are following us. So let me. We have gone significantly over time, but I will assume that since we had a technical glitch at the beginning, we can have. I'm looking at the boss. Okay, great. So I will go to a second round of questions, but I will really ask you to be very brief. So 2 minutes, no more than that, because we were supposed to finish at 9:15. We will take a little bit of time, but not much more. Let me go first to Ms. Mokorosi that I have here on the screen. And again, so Ms. Mokorosi, you hear Tobias, no? We need to mobilize trillions of dollars, no? And I really believe that, as you were mentioning before, pension funds are critical. You mentioned information, no? As a key thing that is that you hear. So what is, how can we make this happen? What are the constraints from the demand and the supply side that you see now in the market to mobilize it? How can we, if you have to prioritize where to focus our work, the regulators, supervisors, IFIs, policymakers work on the demand and supply side of the pension funds, where do you think the priorities could be? should be?
I think the priorities should be in capacity building. I really like that today financial inclusion was mentioned in so many instances, because it's something that is significantly left off the table when we have these kinds of conversations, but that we can't talk about capacity building without including financial inclusion on the retail side of things, but even capacity building in our regulator's office, which I must say from the South African perspective, that has been prioritized. Capacity building of our industry players. We are looking at doing that in some of the forums that I am involved in. But if I still look back at where I started in my career and my advocacy work around sustainability issues, although we've come a long way, we've still got a very long way to go. And a lot of that has to do with capacity building. Should we address the issue of capacity building, it would certainly make a lot of the key role players so much more comfortable to address the issues that we find ourselves facing with. And capacity building includes connecting the dots for all the role players and being able to demonstrate the impact and not just the short term, but the long term impact that sustainability has on all our economies, let alone on our personal wealth and our personal wallets. Right now in South Africa, we've got floods in KZN that have killed hundreds of people in KwaZulu-Natal. You cannot get away from the climate change conversation. We are seeing things that we have not seen before in our lifetime. This is a once in a lifetime event. And in my lifetime, I think I've seen too many once in a lifetime events to ignore things like climate change.
Excellent, thank you very much. Dr. Ma, you mentioned before in your intervention the framework for transition finance. And that is one of the main objectives of the G20 Sustainable Finance Working Group. How do we reconcile this framework, this new framework on transition finance, with the taxonomies that countries are already developing, or that is high-level principles, as Tobias was also mentioning? I mean, what is different in this transition finance framework with respect to other frameworks or other taxonomies that are already going on, or that have already been developed?
Sure. As I said, about 20 countries have their own green taxonomies, and some of them are developing their transition taxonomies. Transition taxonomy should include a list of transition activities that's moving carbon-intensive companies or assets towards low carbon. The transition taxonomy may overlap a little bit with the green taxonomy, but it will include many other activities at project level as well as corporate or entity level. That's why I think different countries may take different approach in terms of presenting the transition taxonomy. For example, in the European Sustainable Finance Taxonomy, there is a subset of activities which are already called transitory activities. If you take out these subsets, it's a standalone taxonomy that's called transition. In China, the central bank is working on the taxonomy itself, currently looking at the 4 major carbon-intensive sectors, including coal-fired power generation, steel, cement, and agriculture. They have not decided whether they will put this into the green taxonomy as something like part 2 of the green taxonomy, or they put it as a standalone piece. But I think that's not important. The important thing is that we need a clear definition of transition activities so that financial companies will be able to identify them at a lower cost than otherwise. And financial firms will be able to credibly commit to some funds to support activities like that without being fearful about being accused of greenwashing.
Thank you, Dr. Ma. Tobias, coming back to you, from the banking sector perspective, I'm going to ask you a question that you will tell me, Alfonso, I need 2 days to answer, not 2 minutes. But what are the main transition risks and physical risks that you think that the banking sector is facing, and what should be, I mean, what can we do from a macro or micro prudential regulation to solve?
Well, unfortunately, there are way too many physical risks out there, as was mentioned in the case of South Africa. And my heart goes out to those that have lost their lives and their homes in these tragic floods in South Africa that have happened just recently. But it's not only South Africa, it's around the world. that we see that physical risk is getting worse. I remember, certainly in Indonesia, there are typhoons and earthquakes, and in many other countries around the world, do we see an intensification of physical risks. And then there are transition risks. So transition risks are really about the adaptation of the financial sector to new technologies, to changes in policies, and to the way in which those physical risks are impacting industries, corporations, profits, etc. So what we are doing are three things. So one thing, within the financial sector assessment programs, we are doing more and more climate stress testing. And so it's not quite a traditional liquidity and solvency stress test. It's more like a climate risk analysis because it's very long term, right? So you really want to understand from quantitative scenarios, both quantitatively and qualitatively, what is the impact on the portfolios of the financial sector as a whole, of the banking sector or non-banks as well. And so we do that for both physical risk as well as transition risk. So for example, physical risk, we did a very extensive effort in the Philippines just last year. For transition risk in the UK FSAP, we did quite a bit of work. So that is really very foundational. Secondly, we're working with supervisors and regulators to have more of a supervisory and regulatory approach. So this is a little bit more microprudential. Yeah. The stress testing is more macroprudential, but it is extremely important that it becomes sort of like the day-to-day activity of supervisors and regulators to really get onto these issues. And finally, we are embedding all of these climate issues into broader risk assessments of countries, because unfortunately climate is going to be more and more of a risk going forward. So, extremely important, and we're, really scaling up our activities in this area.
Thank you. Very good. Thank you, Tobias. Dr. Santoso, Indonesia will have, or is having actually, the G20 presidency as we speak. No? And we know that sustainable finance is one of the key areas as well of priority for the presidency. One of the questions that I think that comes from the private sector side is the need to create the right incentives for this transition to happen. For the in addition to the taxonomies, in addition to the standards, in addition, we also probably need incentives. So my question is, what do you think are the policy layers that we have to consider when creating the incentives? How can policymakers play a role to move the agenda forward, assuming that we have all the taxonomies, standards, frameworks, etc.? What else is needed from the policy perspective?
Yeah, thank you, Alfonso. Yeah, actually, that is actually based on our observation on the first roadmap. Sometimes, we come up with some of the questions, what incentive that I can, issue a green bond. Look, the pricing is almost the same. I think the procedure is the same. Then actually the prudential is the same. So your question is really quite relevant in this. How to make sure that people get into that kind of the instrument that we call it is a green instrument, comply with the green taxonomy. Yeah. So there's a basic question. So last year, Indonesia, issued a particular regulation. If the bank lend to the electric vehicle, then the bank can entitle 25% lower on the risk-weighted asset.
Oh, really?
Yes. Then again, the issue is not really, sorted out because a lot of demand and people try to, borrow the money to buy electric vehicle. Then again, the issue, not enough supply. Because really to have a massive production, we have to have a battery lithium. Then of course we have to start with thinking to how to push to speed up the production of battery lithium. What kind of the incentive that we will give to the battery lithium producer? Yeah. Then again, of course, we have to, in the end, we have to broaden our incentive. Not only very narrow on the vehicle lending, but also upstream and then downstream. Battery charger. Of course, we have to give some of the incentive on the battery charger. Then also we have to, again, to broaden not only in the kind of the vehicle on electric vehicle, upstream, downstream, but also renewable energy. How to make sure that people can transform their coal to be more acceptable energy, and DME, for instance. That's a lot of opportunity actually for policymakers to bring the environment towards the objective of the in the transition of zero emission. Then Indonesia is ready to do this. Then Minister of Finance is very pleased to get the lower tax for the electric vehicle. Then also I believe this kind of the policy, then we can have some, very collaborative effort, all the government agency, then all the community really. I think for the regional government, they are really very pleased to order the electric vehicle for their official vehicle. Then also they are ready to apply the restricted zone. Just the zone is very crowded, then actually they can apply restricted zone for a vehicle to get into this area. But of course, again, the ecosystem is not ready about the supplier, then about the, of course, so the Indonesia is natural resources rich, in terms of the nickel, so we can produce massive battery lithium. So that is in the process. Then again, the timing is very important. But if we back to the transition to zero emission, there is a plan by the government, but again, the financing is huge, and to produce the battery lithium, whether the private sector can do by themselves, of course not. The government doesn't have enough budget really to jump into the financing on this. Then again, the international investor is very important. And then of course, the internal investor also asks what the incentive that I can get in on this. So the philanthropy, I think, is very important as well. So that actually, the timing is very important. The collaboration is very important. The partnership is very important. So without this, is very difficult. I hope I answer your question.
Yeah, you did. Thank you very much. Yeah. And so we are already over time. So I really would like to thank you again, Tobias, Dr. Santoso, Dr. Ma, and Ms. Mokorosi. Thank you so much for joining us this morning or this afternoon or this evening, wherever you are. It was a great conversation. You really brought a lot of food for thought and very good insights for us to go to start up and to continue to kick off this conference, and that I'm sure will also bring very good discussions on the different panels. So thank you so much, and let me go back now to our moderator. Thank you.